64 contestants down to just 4. 8 weeks ago, the Insurance Apprentice set out on a quest to find the best of the best, and here we are today. Who will be crowned this year's winner? This is the Insurance Apprentice finale. Hi, and welcome to the episode we've all been waiting for. I'm your host, Simon Coleman from SHA. In this season finale, I'm joined once again by my co-judges. On my left, representing Marsh, is Matthew Besaidnout. Welcome, Matt.
Thanks, Simon. Happy to be here.
Great. And on my right, apprentice champ from 2018, Knox Dlamini.
Thanks, Simon.
Forever disagreeing with me. Matt, why would Marsh get involved with The Apprentice?
Well, Marsh being one of the thought leaders in the industry, we like to ensure that out there we're bringing the real risks of the landscape to our clients, to the industry, and that we're addressing them accordingly. Also, obviously, Marsh is very big in the skills transfer space as well, and giving back to our communities.
What better place to do it than here? Put
Precisely.
People through some hell and sponsor a show all at the same time.
Trial by fireworks.
Excellent. Knox, former champ, how do you think they're feeling right now?
Oh, they're shaking in their boots, Simon.
Pity we can't see their boots. Here's an interesting fun fact, Knox. More people have been fired from this season than all of the prior 6 seasons combined.
That has nothing to do with my involvement.
No, but we could still change that. Is it a good thing? I'm not sure, but it certainly is entertaining, at least for us judges. Collectively, it's our task today to find the Insurance Apprentice 2021. I'm so excited. Whilst this season, our COVID-friendly format has allowed contestants to participate remotely from the comfort of their own homes, there has been nothing comfortable about the high-pressure tasks we've thrown at them. They've had to avoid elimination every week with lightning-fast reactions and an innate ability to think on their virtual feet. Please give a warm welcome to our top 4. Welcome, guys.
Hi, thank you.
You're looking exhausted. It's almost like this has just been one task after another thrown at you consistently. Fiona, how are you feeling?
Very excited, but also very nervous. I think this is going to be a big task.
Did you imagine that you would land up in the finals?
Yes and no. At times I was like, yes, definitely, but not after all the group challenges.
Okay, well, fantastic. Well, good luck to you. Sunit, how are you? How are you doing?
Yeah, so,
How are the nerves?
So watching myself from previous episodes, I can see what those jokes are all about, Simon. But yeah, I'm going to give it my best, and today is D-Day, I guess. And bring this one home for Marsh.
Oh, we've been keeping an eye on social media, and there are a lot of people rooting for all of you, so good luck to you. Brendan, how are you doing today? Feeling confident?
I wish I could say that. It's a bit of everything. It's a bit of nervous, a little bit confident. It's all over the place. The emotions are running wild.
Anele, quiet confidence there.
Very loud in my own ears though.
You mean there's a noise in your head that we can't pick up on right now? Put it on mute or you're going to be going home. All right. Good luck to all of you contestants. You're in the top 4. That's a massive achievement. Make sure the story of your life is not that you almost became the Insurance Apprentice of 2021. Good luck to you. All right. This episode is brought to you by Marsh, a global professional services firm with operations in insurance broking and risk management. This time round, we'll be skipping rapid risk and we'll be moving straight into the premium presentations. Now, earlier this week, you will have all received a pack of reading material in preparation for your final presentations. This week's topic is prescribed by Marsh and will be revealed to you by Matthew. Matt?
Sure, thanks, Simon. In today's task, contestants are presented with a client, Mega Pharmaceutical Global, MPG for short. MPG is a pharmaceutical company licensed to develop, research, market, and supply drugs in the context of healthcare. For this task, MPG's board has hired you as an expert in risk financing and insurance. Contestants are required to put forward their risk financing solutions, which address the hard market and other conditions and issues that MPG is currently experiencing. As evidenced in the task material, some of these aspects include rising premiums, uninsured risks, threats and opportunities presented by the pandemic landscape, amongst others. We wish the contestants all the best in this grueling task.
Thanks, Matt. All right, let's get straight into the challenge. You'll be given 5 minutes to finalize your presentations. I know you have had some time before this, whereafter you'll be given 5 minutes to present your findings. Your time starts now. Right now, our contestants are in their private breakaway rooms prepping for their final presentations. They cannot hear me right now. Now, as often happens in business, curveballs are thrown our way and we have to think on our feet. So today, we have a little surprise, a nasty surprise for our contestants. We're going to be calling them up individually a few minutes into their preparation, and we'll be requesting an urgent elevator pitch of 30 seconds each. We will then be eliminating one of the contestants after the pitches. Only the remaining 3 contestants will have the opportunity to present. Okay, what do you guys think about this? How would you react if you get this weird call, you think you've got all this time to prepare, and then suddenly the rug just gets pulled out?
Well, they should be putting their final touches together, Simon. You know, to think that you're going to start from scratch and prepare now, and you're going to show up here, then you deserve to leave the competition.
I heard that some of the contestants were kind of joking around and everything before this happened. Is that normal? Or do you think that might be a stress reaction? It seems weird just before the final.
I can't tell you what the other contestants would do. I can only tell you what the winner's doing right now, and that's just being quietly confident in their abilities to see this through.
Okay, good point. Matt, is there anything in the elevator pitch that would just kind of make you go, okay, this person really knows what they're doing, or that's a really excellent idea? Something you're looking for?
Absolutely. So the whole goal here is really solutioning for the client. So we want to provide solutions for those hard market conditions that I mentioned earlier. We want to provide solutions for some of the uninsurable risks that they've had, and then there's specifics of the case as well. So there's also opportunity and risk. So there's a bit of an angle there. If they bring to the forefront that they are solutioning and the value they can provide on the high level, because they've got 30 seconds, on the high level, that would be great. If they go into too much detail and focus on one point, probably going to lose it.
Sure, absolutely. I wonder if they were anticipating something. It'll be really interesting to see their reactions when we bring them back again. So I hope they weren't anticipating this.
They should be, if they've been following.
Yeah, sure. All right, let's bring in the first competitor. Okay, welcome back, Anele. We've had some developments. I'm going to hand over to Matthew just to talk you through it.
Hi, Anele. So, unfortunately, MPG has had an emergency, and we don't have the number of slots available this afternoon for you to address our board. So we really need from you in 30 seconds to pitch to us what is the value that this will bring to us. Your time starts now.
Right, so our main value proposition at this point is to provide an alternative to your insurances where you cannot find insurance for your regulatory risks or operational risks where you're taking on too much of your cover. So that's via risk financing through a captive. And one of those captives could be via a contingency policy at no costs to you, but that is structured and tailored for your needs. So you're saving on premium in that way, but also taking on more of your own risks and helping you manage it in that way.
Thanks, Anele. Your time is up. Okay, bring in the next one, please. Hi, Fiona.
Hello.
We've got some news that Matthew just needs to give to you before you continue with your preparation. Matt?
Just in 30 seconds, what is the key value proposition of what you're going to put forward to us this afternoon to secure your slot.
So your time starts now.
So my key value proposition for Mega Pharmaceutical Global is to make sure that their business can continue to operate and they can continue to protect their balance sheet going forward, making sure that all stakeholders are protected in some way or other, which I will disclose in my presentation.
Thanks, Fiona. Let's bring in the next one. Hi, Sumit. Sorry to pull you out of your session. Matt's got some news for you. I'm just going to hand over to him.
If you could please put forward in 30 seconds your value proposition to us to potentially secure your session.
Your 30 seconds starts now.
Gosh, Matt, I'm really sorry to hear about your emergency, but our meeting is an emergency. Your portfolio renews in a matter of a few weeks, and we need to decide which direction we are going. We have limited time in which to negotiate a deal, and I mean, your company is a big, complex company. I think deals cannot be negotiated overnight. And furthermore, some solutions that have come out of your from your BDM, I don't tend to agree with it, and I think he's gonna present that to the board. So please, Matt, do not cut me off. We need to meet.
All right, Sumit, your 30 seconds are up. Bring in the next one, please. Hi, Brendan. Yeah, we've just pulled you into this urgent meeting. Matt just wants to give you some news. Matt?
In order to secure your slot as one of the providers, because we have to drop one of them, give us your 30-second value proposition pitch.
Your time starts now.
I'd like to pose to the board an investment opportunity into a sell captive agreement, whereby we could look at bringing on an insurance product that would cater for the side effects permanent side effects ranging from the COVID vaccine. What we've found is that in terms of the company's BEE status, they would qualify.
Right, your time is up, Brendan. That's 30 seconds. I thought Anela was okay. Huh?
Anela was good.
She's actually been the best.
Yeah. What Sumit was saying is he's got to get in front of the board because the solution that's being pitched is the incorrect one. And that's the solution that Brendan's pitching.
That Brendan's looking to pitch, yes.
Oh, that is interesting. I really didn't think it was professional the way that Sumit was approaching this.
As well.
Yeah. I thought that the sort of begging and it was too much like a traditional kind of renewal thing. No, you have to see me because you've got this big renewal coming up, and if you don't, it's something bad is going to happen.
Sumit's he didn't present a value proposition. You know, he could know what he's talking about, but if you're asked, hey, sorry, I can't meet, but just give me the gist of what you want to talk about. Oh, no, sorry, you have to meet with me.
Yeah, because you have an opportunity now to secure your spot. And you're not going to get it by saying, please.
Yeah, like begging, literally begging.
You need me, otherwise bad things are going to happen.
I don't know if I felt that Yona put forward a value prop. She just said, I would like to talk to you and this is important. She just articulated it in a way that said, okay, like her presentation style was...
This is what, and she said, this is...
It was very vague.
I'll tell you more about it in my presentation.
So actually, she didn't present anything. She just had a very calm demeanor that made us listen to her.
So no one really caught the crux of the value to be put forward to the clients.
Yeah. But the only person to make the incorrect pitch was Brendan.
I mean, Brendan could very well have the wrong approach.
Are we agreed then?
I believe so.
Okay. All right, can we get them back in, please? Hi, finalists.
Hello.
Hi, Simon.
Hi.
All right, those elevator pitches were generally uninspiring. We don't have time to listen to 4 pitches. We have to narrow it to 3. One of you is leaving the competition right now. Sumit, you were closer to victory than 95% of the people that did battle here over the past 7 weeks. But the title has slipped from your grasp at the most critical time. This is where we say adieu. All right, guys, we're going to take a break shortly, and then we're going to start with the presentations immediately after that. After the break, our quest to find the ultimate insurance ambassador continues. We'll be right back after this.
A global leader in insurance broking and innovative risk solutions, Marsh provides personal and business insurance solutions to protect our clients' businesses for future growth, while offering lasting peace of mind.
And welcome back to the Insurance Apprentice. With just 3 contestants remaining, we are very close to finding the face of the South African insurance industry. Following the elevator pitches, we got a glimpse of each contestant's presentation, and now we're on to the final challenge for the season. And now, for the last time, for the Insurance Apprentice 2021, it's time for premium presentation. Anele, welcome back. Feeling ready?
A bit nervous, but ready, yeah.
You made it into the top 3. Good luck. Your time starts now.
Thank you so much for this opportunity to present on MPG Pharmaceuticals risk management, insurance, as well as looking at some options on risk transfer for you. And mainly this conversation is surrounded on your risks and the current insurance market that we face. So as we've engaged before, the current insurance market can be described as being hardening, where we've seen an increasing shrink in appetite, the exclusion of certain BI extensions such as infectious or contagious disease, the rising cost of premiums, which has been a major concern for MPG, as well as the deductible structures growing as a result of this. The pandemic has presented its own set of challenges as well as risks that are faced in the pharmaceutical industries, where we've seen vaccine trials and the vaccines themselves sometimes not being insured or being outside the scope of appetite in the local market, as well as customer and supplier dependencies. Recent lockdowns resulted in some pharmaceuticals not being distributed or received, as in the case of NPG, where a batch of pharmaceuticals actually expired in your care. So these are risks in themselves and also present operational risks as well as liability risks for you, where recent losses such as spillages and cleanups and third-party liability not being covered, and you've actually retained most of that risk due to insurers either reputing those claims or excluding those claims, or them falling within your high deductibles. So in seeing this, we need to look at possible alternatives, and this is where we now start speaking about risk retention as opposed to transfer to the insurance market. And looking at that, we start looking at things such as risk financing, and we're going to look at why this is possibly best suited for MPG as a solution. But to first explain, risk financing structures can include things such as cell captives, which are generally defined as an insurance company that is wholly or controlled by the insured, being yourselves, MPG in this case. And the main primary purpose is for its owner or you to control it first and foremost, and also for you to benefit from it in retaining your own risks. It creates risk management culture, and you get to share in the underwriting profits. And in this pandemic, where we see a lot of the regulatory risks as well as other pandemic-related risks not being covered, this may be an option and also results in some cost saving. So we propose a cell captive to help you, as it's a niche insurance company that operates in cells, and it's specifically for your benefits. And the separation of the cells within the facility, which is part of the Regulatory and Insurance Act stipulations, is achieved by way of contract, meaning you get to get different insurance policies within the cells. So to cater for your liability, regulatory needs, as well as your assets insurance needs, or risk needs rather. The solution has a lower premium entry, meaning you may not need to pay as much as if it was a wholly owned captive, and is a more better solution to your contingency policy options. And for a company as large as MPG, this could possibly be the best solution to cater for those needs where you may not be able to get insurance in the market, such as your liability insurance at the moment not being covered, and you are actually currently self-insuring that. So with these structures, or within the cell captive, each policy can be underwritten to have its own deductibles, underwriting information, premiums, as well as payout should you unfortunately have a loss. And in a space that's highly regulated, such as pharmaceuticals, a lot of these risks could be excluded from the traditional insurance market. You get to now tailor suit these policies to fit your needs as and when you need to do so. So in this case, our solution to you, where you're currently facing these major concerns and issues, would be to start looking at a cell captive that can be set up for you and managed by us.
I'm going to hand over to Matt now, just to start the ball rolling with the Q&A. Matt?
Nelly, I'd like to understand, so nice high level overall, and you've narrowed it down to a cell captive, but down to our specifics. Which risks, which lines of insurance are you looking at us potentially retaining, and why would we want to do that?
At the moment, it would be mainly around your liability insurances, just mainly looking at the losses that you've incurred over the past 3 years. So 2018, 2019, for example, you retained about 40 million rand on your books. So that is obviously top of mind and major, and also looking at how your general liability insurance is in essence not covered.
And Nelly, the claims, if you looked at the claims history, you would have seen that our loss ratio for the last 3 years is over 100%. So right now we're actually gaining back more than we're paying away for the insurance. So then that wouldn't really make sense to me to put through a retention vehicle, right?
Definitely, but in future you could look at it rising with the rising prices that we can see, and also we can structure it in a way where you retain some of it and you do insure some of it. So if we were to look at, for example, Matt, not looking at specifically a cell captive, it could be a contingency policy. So you could have a mixed benefit solution where you do insure some of it and looking into future retaining some of it to possibly even lower your premium more.
Anele, I just have a question about, you've been talking about the cell captive and the third-party liability covers in particular. We're in the pharmaceutical business, which would imply there are going to be some fairly long-tail product liability exposures here. I mean, how would you see that being handled in a cell captive? I mean, it's almost a moving target. It takes so long to settle these claims. Would you still suggest that's the correct vehicle for that?
Definitely not at the moment. I think being open to the idea of benchmarking is a cell or is a contingency best, or having a mixed solution is what we would propose as well. In terms of those claims, like you say, can be long haul and probably best suited for an insurer that has more experience in the market to handle them. So we can look at retaining some of the short-term risks, for example, cleanup cost, which can blow up and be massive, taking that into account. But when it comes to product liability, like you say, where the exposures are major, we'd look at a mixed solution where transfer and retaining possibly to a certain level.
Okay. Knox, do you have any questions?
Yeah, I mean, thanks, Anele. And you started off by giving us a very, nice summary of why a cell captive would be the best option for us. And as the conversations progressed, we've sort of moved away from that. So as a board member, I'm just sitting here trying to understand what actually is your position and what are you putting forward as the value proposition for us to employ as the board.
Thank you, Knox. So the cell captives would be first prize and taking into in consideration your needs and wants at the moment. So that would be an exercise that we'd pair up with yourselves. And my value proposition is to continue looking at the option of the cell captives, just looking at your recent losses and taking into that, and possibly a mixed policy option in that too.
All right, thanks, Anele. We'll call you back after we've heard the others. Thank you. All right, could we get Fiona in, please? All right, welcome back, Fiona.
Thank you.
So your elevator pitch was quite vague. You kind of left us hanging at one point saying, you'll tell us all about it in the presentation, which was a bit of a gamble, I've got to tell you, in an elevator pitch. But you're still here, and we're looking forward to hearing what you have to say. How are you feeling right now?
Quite nervous, but also very excited, very glad to still be here. So hopefully I've got something that can impress all of you.
Yeah, you're close now. All right, your time starts now.
All right, thank you. Thank you, judges. Today I will be presenting to you an alternative risk approach to Mega Pharmaceutical Global, or MPG, or I may refer to them as the company in this upcoming presentation. So the scope and the aim of this meeting is to look at the current MPG risk strategies, and we've been asked to highlight some key areas of concern for the company. So all risks that the company face, which are insured and uninsured alike, have a direct impact on the company for all stakeholders, as well as the direct responsibilities of the business. There are three elements that I will be highlighting, which are the existing policies where there's assets and liabilities, the uninsured risks, which is currently an ongoing concern, as well as the COVID fast track of the vaccine. So if we take an approach to look at the previous losses that the insured has faced, at a glance you can quickly see that the insured MPG is currently retaining 176.5 million rands worth of risk on their assets, and from this it's quite easy to see when you look at the insured's balance sheet that they are being able to meet these losses where they need to. So it is performing quite well. The asset risks of the business are medium, but a catastrophe risk is a severe risk should this occur, because it could affect various divisions of the business and impact on the profitability of the company. The risk solution for the assets is to retain some of the risk for the company by means of continuing to purchase high deductibles through a contingency policy, which will provide cover for the key risks of the company, as as currently the business is covering itself for these already. It is important that all the catastrophe losses will be covered to ensure smooth operations of the business, and risk management is going to need to be at the top of mind with all business decisions as well as all departments. If we then jump onto the existing liability policy, and we look at the previous losses and the previous histories that the company has had, you can quickly see that losses occurred and claims paid show a significant amount of risk that is being transferred away from MPG. So in the instance of liability, any claims that arise are from unknown sources, and at the time of making decisions to purchase or retain cover, it can be quite a difficult thing to do in the moment. But it would not be wise for the business to take on the responsibility of retaining that risk, but rather transferring it to an insurer or another risk carrier. And in doing so, it would protect the business against the unknown losses that can occur from a liability point of view. Looking at the results of the last 3 years worth of cover, I would strongly suggest that the company purchases a higher deductible limit, such as 500,000 Rand, which would greatly reduce the premium expenditure that they are paying. It would also affect the company in being able to manage these losses better, but it must be at the top of mind that they must refer any claims that they would be paying under the deductible limit to the insurer. And any costs and savings in this premium can be put forward to fund the environmental liability policy, which is to be purchased, which I'll be talking about next. So if we look at the uninsured environmental risks, which the company has had to fund themselves, the gross losses that they've suffered thus far are 39 million. But there's still estimated compensation and remediation and other costs which haven't been paid of approximately 71 million. And the full effects of these results are still to be seen, as there's still a lot of outstanding things. And it's very, very important to note and to stress that there's no cover for this in force currently. So although the ongoing concerns and the rehabilitation of areas which have suffered losses as a direct result of the company are still in force, it's really, really important to note that these type of occurrences.
Fiona, we've kind of reached the end of your time limit. I'm gonna hand. Thanks for that. I'm gonna hand over to Matt.
Hi, Fiona. So, choice of the contingency policy, I think that makes a lot of sense. I agree with what you've said in terms of the liabilities and the claims that have been sustained there already. It doesn't make sense to retain that. You start going into environmental and the gradual pollution exposure. Now, I'd like to understand, in terms of gradual pollution exposure, in terms of sudden and accidental, those two spectrums, are we saying we want to put those both through this policy? And what sort of retention levels are you actually recommending then?
I would definitely recommend that they take a higher deductible, because they've shown it would be a separate policy, because it's generally separate to the assets and the liability side of things. But I would definitely take a high deductible, because the company has already shown the ability to fund the losses that they've already occurred. But I would definitely make sure that limit is sufficient, because the previous losses show that it can be very high, because it's a very unknown quantity.
All right, so this would be structured as a third-party risk. So in the first instance, a contingency policy would not be able to sustain that, right? So that would be one shortfall. And after this proposition made its way to me in the first case, I found it quite strange that we, as a vaccine producer, would want to go into the market and say, here's insurance to cover you in case our vaccine makes you sick. Wouldn't that be a bit of a PR nightmare, just looking beyond the immediate revenue benefits or structuring?
I don't necessarily think it would be a PR nightmare. I think if you take into account the nature of research and development, and if you look at other vaccines which aren't the COVID vaccine and how long those vaccines normally take to get to market, I think it's a step in the right direction to say, listen, we understand that the world is not going to move forward if we don't have these vaccines, and we understand that the necessary time periods of previous vaccines has not been met. But we are at least making an effort, one, to make sure that the world can carry on, and two, if there are any adverse effects, which have been minimal, if you look at the grand scheme of how many people have been vaccinated worldwide, it would be it would be beneficial to be able to provide compensation for the few people that it does affect.
Fiona, I think that to assume that the vaccines have been around for 6 to 8 months and that's a long period of time, long enough to know if there are any adverse effects, whilst we're all in queues waiting to get this vaccine, I'm not 100% sure that MPG should be taking a punt on that and putting together a facility to try and provide insurance for it. I agree with Matt as well. It's kind of it does create a little bit of a public relations problem, saying trust us, but you know what, if things do go wrong, don't worry, because we'll kind of pick up the pieces here, because you're talking about people's health. Getting compensated isn't always, well, Granny's dead, but you know, here's 100,000, so this is a good company. Thanks for your presentation, Fiona. We'll chat to you in the group session. Hi, Brendan. How are you feeling?
Nervous, anxious, anxiety levels are high, but
it's the home stretch.
It is definitely. Let's hope.
Just one small hurdle to leap over, and that'll determine whether you're the Insurance Apprentice of 2021.
You can be scared and excited at the same time.
All right, we'll try and harness that. Let's hear your presentation. Your time starts now.
Good afternoon to the board. Today, I have identified the risk retention strategy as well as possible solutions that the company can consider moving forward. I've identified some of the risks, and I'm going to start with that. I've kept everything to the point, and you're welcome to address any questions at the end of the presentation. The first risk that I've identified is the mismanagement of expired medicines. A possible solution that I've considered for this specific risk is the option to transfer the risk to the negligent party. In this case, if we look at the service provider that's being used to destroy the expired medicines, I feel that perhaps going forward, a contract should be in place listing that they have liability cover in place to cover this type of risk should they be negligent in their duties, so that the risk is not then transferred onto the company. The second possible solution that I looked at is within the company itself, perhaps if not already, perhaps employ or hire consultant health and safety risk managers to specifically monitor the compliance in terms of the processes that are required to keep these expired medicines, as well as the items or vessels in which they're contained. They should be looking at the risk strategies to make sure that they kept to a good quality to a certain extent to avoid the medicines leaking out. The special case should be considered as well due to the impact of the COVID-19 pandemic. What we found is that the decrease in sales of certain medicines could then result in accumulation of medicine going forward, and that's something that they should keep in mind. So those are the two. I feel that they should retain this specific risk and just manage it better, and perhaps that could help. That could be the solution going forward. The next thing I've looked at is in terms of the cancelled policy for covering gradual pollution. This policy, this sort of risk should be retained by MPG, as the premium that was paid for this policy previously didn't make any financial sense. The business should rather opt to invest the premiums payable on that policy, or that was previously paid on the policy, and they'd be able to realize the sum assured over a very short period of time, within 2 to 3 years. The excesses held on the previous policy as well was of a quite high nature, which obviously left the insured, or MPG in this case, with still quite a big risk in terms of the excess amount, which left very little actually being insured at the end of the day. In terms of the pollution risk that was identified, what we can consider here as well is that although the policy has been cancelled in terms of the risk, in terms of pollution, perhaps going forward, what MPG could consider is taking out a contingency policy, which will allow for a share in profits in the event of the claims experience being positive. In this way, they're not unnecessarily paying premiums without any chance of having a return should they experience good claim or positive claims experience. Should the need for reassurance backing arise, this contingent policy would be able to accommodate for that as well. In terms of the current policy that's actively in place, they could also look at transferring the risk to a contingent liability policy, as the bulk of the claims are minimal and are self-funded at the moment in any case. In relation to the premium that they currently paid, by moving the risk to a contingent policy, it could result in possible profits that the company could then gain from. This would accommodate for both minor and major risks going forward. The general liability policy is well costed with a minimal excess, and I feel this policy should remain in place as is. In terms of the opportunity considerations, in terms of the income stream from the generation of policy premium relating to the side effects resulting from the COVID-19 vaccine, we have looked into this, and the following notes can be taken forward.
Brendan, sorry, you're out of time. I'm going to start by handing over to Matt.
So you've put down a few good points there. In terms of the assets, I don't believe you mentioned any retentions on the assets line. Now, our experience has been really good there in terms of claims, and we have had a fairly significant increase in our premiums over the last 3 years, if we use that as a reference point. Why didn't you not think we should retain this?
So the reason why I didn't consider keeping it is because of the fact that the premiums are substantially high on the actual policy itself. And in relation to the claims, most of the claims are currently being self-funded by MPG. They can actually benefit going forward from a contingent liability policy because there's more profits to be shared, considering that they've had relatively low claims.
Absolutely, that's my point, but I don't think it was a point in your presentation.
Sorry, I'm not understanding correctly. Are we not saying that we're paying away premium unnecessarily on our assets program?
The claims history and the premium increases over the last few years is showing us that there is potential benefit of retaining additional risk. So,
and is Brendan not saying that we shouldn't be retaining additional risk here? That's the bit I'm not understanding. What are you suggesting we do with the assets?
So I suggested we move it to a contingent policy whereby we'd be able to then benefit from profits.
Which facility or vehicle would you look at for this retention? Which one would you recommend of the spectrum of contingency to sell captive to wholly owned captive? What would your bet be?
So perhaps they could look at holding this risk themselves, and perhaps in the private capacity as a company, hold the investment on their side rather than going into a sell captive environment.
Are you able to support your answer, or do you want to change it?
Perhaps, look, based on the information that they've confirmed now, obviously there is tax liability, and taking that into consideration, as well as the fact that there could be potentially more loss in the future, and the fact that there could possibly be no formalization in terms of the claim process, perhaps we could look at maybe a contingent liability sort of policy, again, because you're able to retain the smaller risks, and obviously the higher risks, you then have access to reassurance for that.
Does it make sense from a business perspective, because I'm concerned about this, that we are selling insurance to cover the adverse effects of our very own vaccines?
So technically speaking, I I actually didn't consider the fact that we were actually producing these vaccines. And I think that's basically a lot of contradiction in terms of the faith as a company that you'd actually have in terms of the vaccines.
Brendan, you seem to kind of go down a road and then, in this meeting you're being asked a question and you're going, well, I hadn't really thought about that, and then changing tack and sort of going in a different direction. Would you imagine that's going to create confidence of the board in you as our risk expert?
Taking into account the circumstances, I wouldn't.
Are you then admitting to us that you're not the right advisor for the job?
Not necessarily. I am, and based on the recommendations and the topics it brought about, I can obviously then assist in getting the processes moved forward.
All right, thanks for your time, Brendan. We'll see you in the adjudication. Thank you. All right, judges, we've heard all of them. You've got the photos in front of you. I must say this is proving to be one of the most challenging judging sessions. I think that, Matt, I have to congratulate you on setting a challenging task, because I don't think that anyone kind of nailed all the points that you were looking for. So for me, there's no clear winner based on content.
I think what can be said is that the reading of the pack materials was definitely not thorough enough from any of the candidates. There's definitely a bit of a toss-up in terms of the winner, but there's a clear loser here for me.
I think I'm in agreement with you as to who the winner is not. Knox, did someone jump out as the winner?
No, and it's you don't want a situation where the winner scrapes through. We're crowning the Insurance Apprentice here. And you're right, it was a very disappointing moment, Matthew, when you destroy your own credibility, unprovoked.
Which one did I feel like I was more engaged in, and which one did I feel like I was kind of being taken on a journey where I could understand what was being shown to me? I felt that it was this candidate on the right here. I didn't feel that same way with the other one.
I'm not convinced on your choice and your option.
Of course you're not, because you never are.
But I think this now becomes a bigger conversation than just looking at the technical aspects of the task. We are looking for the Insurance Apprentice. We are looking for an ambassador. We are looking for a strong contender who can really represent this industry well. Perhaps let's shift the view from the technical aspects of the task. If Matthew's satisfied that none of them really hit the mark, and let's have that conversation.
I mean, there were some fundamental misfallings on both sides. Really, what I'm seeing here is they have not looked into how the client is fitting into this landscape. They're not looking into how those dynamics are at play. We want someone who is going to really consider the client first. And I think that was the person on the right.
Who gives you more confidence in our industry?
I like both of them. I think they both have played an excellent game. I've looked at the scores in the games as we played up to this point. They're very close. I don't know. What do you think?
You're totally correct, Simon. In a situation where the technical prowess doesn't determine the outright winner, I think it forces us to then look wider and go, what are we looking for in an ambassador? What are we looking for in the apprentice? And which one of these candidates best fits that description?
So why don't we bring back the top two? We eliminate one, we bring back the top two, and we put a question to them. Single question, and we vote on it, and we decide.
For all intents and purposes, we're sitting in a situation where it's the last stretch, And on the spot, they should be able to very clearly, passionately articulate why they should be the winner of this competition.
I think it's a great idea. So you're suggesting we get them back, the two top contestants, we get them back. And the question is, why should you be the Insurance Apprentice of 2021? All right, welcome back, guys. How are those nerves?
Shot.
Real.
Yeah, this has not been an easy time for us either. All right, so 64 contestants, 8 weeks, countless challenges and quizzical questions. We're now down to the wire and minutes away from announcing the winner of the Insurance Apprentice 2021. For one final time, let's take a look at what's up for grabs.
This year's winner will walk away with a package prize from Lloyd's of London valued at £75,000, £40,000 in cash prizes from Tracker and Auto in General, a £75,000 bursary from Incita, a Garmin watch sponsored by Genesis, and mentorship packages from Ultraverse.
All right, so this was a very, very tough process that we've been through as judges, and I'm sure for you too as contestants. I can't say we were blown away by the presentations. There were holes definitely in all of the pitches that we saw today. I think what kind of sank the campaign for one of the competitors was really this kind of flip-flopping process where something was suggested, then when questioned by the judges, went back on it, and I mean, it's one thing to be accountable and obviously open-minded and honest when you're discussing things with your clients, but you cannot leave them with this feeling of that there's no trust, there's no confidence in the professionalism. You don't get the sense that this person actually knows what they're doing. That is not the way to handle a pitch, especially when you're discussing a risk as complex as this. And I think that could have really been handled a lot better. And that is why, in third place, and leaving us right now, is Brendan. Brendan, you played a good game, but you really did let yourself down in that last presentation. I hope you'll take something from this.
No, I agree, Simon. I mean, I was a bit all over the place in the presentation, and I can't argue with that. This was a great learning experience and a great opportunity, and yeah, thank you for having me.
Brendan, you are dismissed. All right, congratulations to the two of you. You're still in the competition. Now, ordinarily, this would be the time when I would identify one of you as the winner of the competition. However, we found this process to be practically impossible to work through. There were just too many things missing. There wasn't a presentation that kind of really hit the mark. Matt.
I think two very different approaches, Simon. So one of you took the approach of laying down the landscape of risk and then zoning into the client's risks, but didn't quite tie this all back. The other did not really first look at what landscape is this client faced with. I think what's evident also is that from the reading of the case, the reading that was supplied, both parties have not done all of the reading. there were gaps and holes in information here, and both sides had issues. So really it was difficult from a technical perspective to say who was more right than the other. And somewhat right, somewhat wrong, and then there's a big mid-ground. And you both fell within the mid-ground today.
All right, so when we hit a stalemate, not the right thing to do to have fastest finger first. And Knox has come up with an idea which I think would really fit, would be befitting, a befitting way to end the Insurance Apprentice 2021. What we'd like you to do, you'll both have 60 seconds to tell us why you should be the Insurance Apprentice of 2021. We will then vote as judges as to who we think should be crowned Insurance Apprentice. Okay, Fiona, your 60 seconds starts now.
I've been very fortunate to have grown up in such an incredible industry, which is the insurance industry. From doing my homework on boardroom tables of insurance companies to starting my own brokerage at the age of 25. I use this profession to provide and to upskill people that work with me and help and assist my clients. I have such a love for this industry, and I really want more young people to be involved in it.
Anele, your time starts now.
Well, thank you so much for the opportunity again this far. And I think I should be the next Insurance Apprentice because I'm passionate about this industry. It's one that's become a home for me that I stumbled upon and that I've become passionate about in growing as well as extending to the general public. I think insurance is broad and wide, and it can be a place for many other people. And in growing the industry, we are able to reach other people and upskill as well through in-seater programs that I'd like to become a part of more, as well as growing the knowledge extension of it as well. So yeah, I'd love to become the next Insurance Apprentice. Yeah, thank you.
All right, thank you, Anele. All right, judges, you pass me your votes. All right, thank you for your presentations. The judges have voted, and the decision is unanimous. The Insurance Apprentice of 2021 is Fiona Fitzpatrick.
Oh, thank you so much.
Congratulations, Fiona.
Thank you.
How are you feeling right now?
Oh, very emotional. Thank you.
Oh my God, you do have emotions.
It's been brimming up inside.
You've played an excellent game, Fiona. I mean, it was tough for us at the end to make a decision. You really sold yourself well. And yeah, I think you'll make an excellent ambassador for the insurance industry. And I hope you continue to do the good work that you've already clearly been doing. So congratulations and well done on being the Insurance Apprentice 2021.
Thank you. It was some tough competition, Anele.
Anele, I'd just like to congratulate you as well. I mean, you've really been outstanding right from the beginning. It all came down to this last 60 seconds. We really appreciated your input and all that you've done in the competition. But yeah, when it came down to it, I think Fiona just managed to edge ahead of you. But congratulations on being the runner-up in the Insurance Apprentice 2021.
Thank you so much, and thank you for the opportunity.
And that's a wrap for the Insurance Apprentice Season 7. Special thanks to all of our sponsors throughout the season for making this happen. And of course, thank you to Matt and to Marsh. What a brilliant way to end the season. And to Knox, your support and of course never agreeing with me throughout this season. I really appreciate it. But thank you. Thanks for your support. And of course, to Old Mutual Insure, our studio sponsor, thank you very much. And a big thank you to our viewers for tuning in. I'm Simon Coleman, and this is me signing off for the Insurance Apprentice 2021. Until next year, be safe and goodbye.